Good morning, good morning, good morning. Happy Monday, everyone. How is everyone doing? Hope everyone had a wonderful weekend. Good morning, John. Good morning, Sterling. Good morning, Patrick. Thank you for putting in some news, Sterling. Biden's job approval edges down to 38%. Sterling, I take it you're not a Biden fan. Take it you're probably not going to be voting for Biden. Heinrich, good morning to you. Good morning, Eric. Mark using trading price and time method. Good morning, the Mark using trading price and time method. Welcome, welcome, welcome. So, again, I hope everyone is prepared for another week of trading. We're going to be going through a bunch of stuff. By the way, house is officially under contract, so we have inspection this week. If that goes well, then everything should be lining up for the move. I'll keep everyone posted because I will be gone for a bit during the moving time. But other than that, then we'll hit the ground running and develop the final course with everyone. Today we already had building permits come out. We have new home sales coming out 30 minutes after the cash open. We got Dallas Fed Manufacturing Index at 1 hour after the cash open. Then we got some bill auctions, note auctions, and Fed Schmid speech. So Schmid is talking this evening. So after both the cash and the futures will be back open at that point. Tomorrow we have durable goods, home prices, bar speaking, Richmond Fed, regional index, Dallas Fed, services. Wednesday starts getting a little picking up busier. We have the second estimate back to Q4. So this is the revision. Remember, there are multiple revisions to the quarterly GDPs. So we have that coming out. We have the PCE related to the GDP quarter coming out. And that's secondary to the PCEs that relates to the month because that's farther back looking. We have the EIA numbers as always, unless there's a holiday, which there is no week, and then we have more Fed speak. Thursday is very, very busy. We have now, this is the January PCE numbers, and also the January personal spending, jobless claims as always on Thursday, Chicago PMI, and more Fed speak, Kansas City regional indices. So lots of Fed speak this week. And then Friday, we have the ISM manufacturing, S&P global manufacturing, Michigan consumer sentiment for February, the final numbers, and more Fed speak. So it's a big week of Fed speak. This morning, Walmart continues its march higher. NVDA bouncing back after hitting a key target and reversing on Friday, but all chips look like they're up. Micron up almost 4.5%. What else? We got Berkshire Hathaway up, Amazon up. We'll take a look if we have some time at a couple key stocks that I am watching. But other than that, it's pretty mixed. The groups, let me just do a quick refresh. We have technology, financial, and consumer cyclical leading, and comm services, basic materials, and real estate lagging, but pretty much balancing each other out. It's a pretty neutral day so far. Fed watch is still 3 rate cuts. Remember, the next meeting is in 23 days. Fear and greed still solidly in extreme greed. Schiller PE in nosebleed territory. But that does not mean things have to stop. I am watching waning momentum, though. I did actually not look. Why is there a there? Oh, there's Berkshire. I was looking like that was pretty close. Berkshire had earnings this morning. Domino's Pizza, which I did not look at. Zooms after the close today. Workday. Also, tomorrow, AutoZone and Lowe's. There's nothing really this week that's going to shake the markets, but there's a cumulative, a bunch of things that could get interesting. Wednesday, Advanced Auto Parts, TJ Maxx. After the close, AMC. Is that a thing anymore? Salesforce, Snowflake, Paramount. There's Paramount. Thursday, we have Best Buy. So we're going to get some insight, with Advanced Auto Parts, AutoZone, Lowe's, TJ Maxx, Best Buy. We're going to get more insight into the consumer, and we have retail spending back for January. Thursday after close, Zscaler and Dell. Friday, plug, Fubo. Friday's really not much at all. So do keep. I'd recommend keeping an eye, even if you don't trade the things, to what effect things are having and any guidance they give consumer related, especially since some of the other consumer numbers with personal spending and everything are coming out. Who else do we have here? What else? I said good morning. Did I get you? Hey, Eric. Good morning. I think I already did. Royal Palms, good morning. Can we check out Disney if we have some time? Good morning, Tony. All right. So S&P still closing up on Friday, but sort of a weak close. This is really starting to stair step down. I love the 3 push higher with divergences. We are not at cycle tops yet, but it's got to do a serious push higher to really start breaking this momentum pattern. Any targets the upside today is really which we already passed Friday's close. Friday's close, what is it? 5101.50, and we're at 5103. So that's going to be a little minor key support level. Your more significant support level is 5095. And really the first target, besides using very short-term harmonics, is Friday's high. And then above that, we have 5134 is the next key level. So we don't have much of an area left with pausing bars. If we take this, that's the reverse harmonics, and I don't really want to go full-fledged forward harmonics. We got to go this little area and see with the next level we have to wait for more pausing, because we just have next minor level would be 5157. But this is very key, this 5134 area, to watch if it stalls out there, especially with cycle tops. On pullbacks, I'll be watching. If we do come up to tackle Friday's high area and double top, then I'll be watching the key low of 5087.25 for a potential pullback pattern, because remember, on Wednesday and Thursday, this is a very strong clear path move. The breakout level from that clear path moves is officially 5057. So even if this doesn't double top, I will be really watching that 5056, 5057 area. Going into that, 5087 is the key support. Below that, I'm really looking at about 5075. And then we have that 5057. Nothing even flips the short term without a close below 5021, and that's in the very short term. Good morning, Christoph. Hit the thumbs up. Thank you, Chris. Thank you. Keep your fingers crossed that all works out, and I get to get out of the land of cold. So NASDAQ. Again, when I talk short harmonics, see, if you're looking at this, let me just change the color of this real quick. Let me just change that. So this is what I'm talking about. I didn't do it on the S&P, but I'd be watching, like in the NASDAQ, on any push up about 18,033.50, and then very key is at 18,061.25, because anywhere in here is a short-term reversal. A 1 hour close that stays above 18,061.25, then I'd be targeting Friday's high area. And remember, into double top territory puts us at 18,089. Now, the breakdown zone, whether double tops or not, is going to be 17,922. You're also into a clear path move here. I'm just going to leave this line in as a breakdown zone, but the breakout level from the clear path is 17,791. And then the major support area will be between 17,758.75 and 17,762.25. You get below 17,762.25 on a closing basis, it's looking for a bigger rollover pattern. What would that bigger rollover pattern potentially be? A valid potential double top. Might never trigger. But so depending on where you're trailing from, that's a good trailing stop level from my perspective. If we do break above Friday's high, 18,215, 18,308 to about 18,345. There's a triple cluster up here. Keep that in mind. You have daily cycles still going up, but you also see the stair stepping down with the RSI with the waning momentum on each push higher right now. Good morning, Legion Reaver. Good morning, Richard. So that's why I'm watching. Now, the only thing that's on the radar for a potential more significant topping pattern is in this NASDAQ. And remember, tech and comm services has really been leading stuff higher. So that could be a significant short-term shift in the market should that trigger. So just keep that in mind. The Dow, really, you see right near Thursday's high, Friday's high, poking through and then closing below this 39,225 area, and today still basing right below it. So if we break above that, again, I'd use the short-term harmonics, but that's really focusing on Friday's high area, 39,343, and then 39,439. There's been some also rotation into the Dow stocks. Again, the larger blue chips, the safer stocks, out of some other stuff. So keep an eye on that. That's what I'm watching to see if the NASDAQ, if it starts rolling over and we're still getting a rotation into the Dow. But a key support, 39,090 to 39.1. If we break below that, next key area is 39,000, and then we're about 38,950. The Russell, still in the flagging channel pattern. I'm just going to be watching today Friday's highs and lows. Friday's highs and lows. We start taking out Friday's lows, watching for more of a pullback. We start taking out Friday's highs, more of a retest of this high area. Other than that, the Russell's not very interesting from my perspective right now. VIX is still elevated related to short term, but it's come back in from the couple pops it's had higher. We'll watch for a more substantial rally if we start breaking below about 1365. We'll watch for a more substantial pullback if we get above 1435. The DAX still stalling out at the harmonic area. We start breaking out above this 17.5, 17.740. Other than that, key support 17.2. Notes, really not much. A little bounce on Friday. Not really much happening. We're still in the larger downward pattern. And remember, we do have GDP and revision GDP and also the PCE numbers coming out. So we could get some serious movement starting Wednesday and into Thursday on notes and, of course, the micro yields. Micro yields pulling back into the rotation zone, looking to possibly rotate back up. If this doesn't make a big rotation today, it will be setting up for a potential %B buy tomorrow on a break of today's high, but we have to wait till see where this closes today for all you %B followers. So that's what we're watching right now. Other than that, still not hit that first target. But depending on how those numbers come out, this could we could see again some serious momentum. 10-2s coming down. I'm just marking this essentially completed. The little mini double top, and by the way, the major double bottom, which is on a monthly time frame. You see back here, nothing here has invalidated that at all. At this point, still the invalidation point has to be a close below 7 is roughly minus 70 basis points. So there's nothing else. There's nothing topping. Now, what's more interesting is we do have a little mini monthly double top. It could turn into a horizontal channel, but I'm going to keep an eye on that. You see it here on the weekly too. If we were to get a close below minus 47 basis points roughly. Dollar index is looking, Euro's starting to try to break out a little higher, but I think we're going to get some major movement with the GDP and PCE numbers this week. Still, 103.20 is my key closing level. Getting back to cycle bottoms and getting close to oversold, so it'll be interesting to see. But if we get a bounce, but unless we start really breaking above about 103.70, nothing yet. Crude pullback on Friday, still in a top. Take a look at this from the bigger perspective for all the crude traders. So we made the high at the end of December, broke above it, but then came back down to make this flagging channel. But now we're still basing. We're basing at this area from the end of January, And now it's going in the end of February when we're still basing. So I'm watching to see if we start closing below 75.50. Close below 75.50, I will really start watching for a pullback to 74. Other than that, I'm watching to see if this level holds, we could make another move higher, and we've been chipping away at this 78.50 repeatedly. So if it breaks through there, you could see a pretty quick move up, especially with daily cycles getting to the bottom. Natty gas, we talked about this. This was the secondary reaction. Now, remember, primary, secondary reaction. Coming back down, hitting the 75% harmonic, so setting up a potential only double bottom against both the daily and the weekly rotation zone. So if you're trying to trade that, you have to be very nimble. Very nimble, and the top of the daily rotation zone is at this 180 or roughly 190 level. First target and declining rotation zone. Now, this might never trigger because we are back at a daily cycle top. So this could easily rotate lower and somewhat turn into either a larger double pattern or turn into more of a horizontal base, getting the rotation zones eventually out of the way and then building up a stronger base long-term pattern. Gold, not much to talk about. Silver, no close below 62.5 to invalidate the double pattern yet. So I'm still watching 22.52.5 on a closing basis. Or a trade, intraday trade through 22.34.5. That would invalidate. Then that would be a pattern that triggered and did not work out. Remember, not every one of them works out. That's why you always trade with risk management and stops. Yen, still potential little double top, still in the intervention territory, but nothing yet. This does, just because there's the potential, does not mean it has to ever trigger. Next key levels are still about 151.40, then the 151.90 to 152 area. Euro really basing here, so this is going to also react to the numbers coming out Wednesday and Thursday, but so far I'm keeping more of an eye on the first the dollar index as a whole. So that's where we sit there. I mean, if this gets up to back into above 108.67, we do have a interesting double topping pattern, but we're not there yet. Nothing to really talk about with the pound. Spiders, Spideys. So you had the reversal on Friday, little down close. Key levels on the spiders, we'll watch for Friday's low. Friday's low for any breakdown, that's 507.10. Below that, I'm using 506. And then roughly about 504 to 504.60 as a very key support zone. So that's in the short term. Any move up, let's see, we have 507.85, so going in the open, 507.85 is going to be the key support, which is Friday's close. I'm watching Friday's open as a first target to the upside, 509.27, and then the highs. 510.13. If we break above that, remember we still have another major cluster at 512.76, and you can also see the stair step down here in the RSI. We still can get a couple more days of cycle pushes higher, so keep an eye on that. That there's no major topping pattern in there. Now the Qs have formed a potential double top. Again, a long way off from triggering. It might never trigger, but 421.63 is the key level on a closing basis. Other than that, still gapping up from Friday's close. So 436.78 is to retest Friday's closing area, and then this is going to be the low and roughly the 25% harmonic coming in at 435.79 area. And then very key support for me if we do sell off today is 433.48. To the upside, I'd be watching on any break up would be Friday's open because of the reversal day, 439.65, and then the high from Friday, 440.59, and then 441.93. I think is the video still in? Yeah, there you go. Futures course and Discord, Richard. And remember, just because it could be a setup now, you still have to wait for the close. because a closing can modify that. Bitcoin, I bumped these levels down because now it's getting to a very significant level at about 50,746. So we got closing slightly below that other level I have, but we've developed a very significant level right here. So until we get a close below 57,746, this is still just a sideways corrective pattern for the Bitcoin fans. NVDA, Tesla, all the Tesla people went to NVIDIA. Still, it's just not looking healthy. If we start closing below 190, would not want to still be in Tesla in the short term. Other than that, nothing's really changed. NVIDIA, we'll get to that. Disney too. Is there any other stocks I missed? This is what I'm talking about. We had the 820 harmonic reversing there on Friday with very waning momentum on the daily. So NVIDIA's got some heavy lifting to do. Heavy lifting to do. We don't even have another major pausing bar yet, so I got to use the minor area, which gives us 844.12 and 864.31. If this turns into a daily pausing bar, we'll ratchet it up from the longer term perspective. But until that, if it does reverse, it's gapping up today, but there's going to be some major resistance near Friday's highs. Take out those though, 844 and 864. Other stuff, let me just do Disney real quick. Disney tried to break down with still the close up here. Really watch today. If you're watching on the closing basis, this is 107 area. We're still trading 107.50. So 107 is still very key. Does this, let me just double check something. That this technically does qualify. It would have, because remember, a gap is area that can be traded into and is a clear path. Not that it's necessary for a double, but here you go. So technically on the 4 hour, that's triggered. On the daily, and I'd really look at it on the daily, technically what's the low here? 107.69. Close 107.67, so that is also triggered on the daily. So you have actually a triggered double pattern on the daily against the rotation zone, but this could easily take it back to the 102.60 area. Just curious to see where those gap harmonics, and that's exactly where for the gap harmonics where the 75 is. So very interesting right there. Very interesting. That's how I'd set up Disney at this point. Now, if you're looking for, since it hasn't hit stop reduction yet, still the technical invalidation point is 110.63 on a closing basis. Is ES at cycle tops? Not quite yet. We could have a couple more days to get there. Other stuff I'm keeping an eye on. Keep an eye on this. Microsoft could be setting up a significant topping pattern, but needs a close below 397. You know, Apple still has confirmed but not triggered the double top, so that still needs a close below 180.17. Meta is also waning momentum, eked out a new high on Friday and still downwards close. So really, I'm watching this little trend line in the short term right there. So those are a few key things I'm keeping an eye on right there. Did I miss any other stocks? QTWO. QTWO. Has a strong looking chart, has triggered a weekly double bottom. Where's the weekly double bottom? Let me see. Oh, this old one. Okay, so this is what you were looking at. That was hit the first target, has continued on its way to the second target, and third target is 52.10. And then the target above there that I would look at, let's see. We got the 200. So I'd be looking at, yeah, this area. If it breaks and keeps going above, especially look at the 25% harmonic and the roughly the final target on that double. And then above there, I'd use about 63 to about 67.50 as a key target area. That's how I'd map out that one. Other than that, let's just peek back in on the S&P going into the open. I mean, if it starts breaking down back below 5,100, we could see that quick return to 50.95. It's really got to get above this 51.07 to start getting a move on into the open. How to identify double tops and double bottoms? Well, I can go again. For example, for this to double top, it has to at least get above the 75% harmonic to at least qualify. So that's the level you're going to be watching. Then it has to trigger below that. This would not be a valid double top into the open because it's not reversing enough of a move. There's a fair amount of rules to it. You'll have to stick around to the channel and to keep learning over time. I'm not going to review them all now, but that gives you incentive to keep tuning in and learning the rules. So that's where we stand. Let's just see where the tick is coming in. Slight negative opening, but nothing major. So really with any bounce in the tick, we want to watch back at that S&P to see how it forms about this 106.25 to 107 area. And to see if it stalls out there, because that is actually pretty strong resistance. Fairly strong resistance, at least going into the open with a slightly negative tick. Then above there, you're looking at 51.12 as the next key level on a continued move up. And then remember, looking at this, the key area you're going to be watching for a close at is about 51.10 on an hour basis for more follow through to the upside. All right, that's where we sit right now. I shall talk to everyone later. Everyone have a wonderful trading day, and I'll be back tomorrow morning. Bye for now. Oh, wait, hold on. Have you noticed that tick can be super bearish at the open, then completely reverse for the day? And yet, yes, that's why we watch, especially with the bearish opening, while we watch as the tick recovers, how the markets react to key resistance areas. And whether those turn in and remain key resistance and the tick rolls over, or if those break through the key resistance and the tick continues to strengthen and that key resistance turns into support. That's the best I can tell you at this moment before I have to jump, Christoph. Again, thank you for tuning in, everyone. Bye for now.